Are we in a buyer's market? Hey everyone, welcome to this week's video. Today we're talking about the current market cycle and where we're at in it. For the past few years, pretty much since the pandemic started, it's been a crazy seller's market. There's been houses, multifamily, all pretty much all real estate has been a seller's market where prices have just been crazy. There's multiple offers on houses all across the country, and house prices and large across the country have gone dramatically up. There's very few places now in the US where there is affordable real estate. It doesn't matter the market, it's all gone up everywhere. So now we're finally starting to see a shift into a very least a neutral market, if not a buyer's market. So I'm going to talk today about the stages of the buyer's market cycle and what to look out for. And you could probably apply this to which market you're in because every market is going to be different. Some markets are going to be further along in the cycle than others. Some markets we're 100% already in a buyer's market. Others are still teetering along. So hopefully these stages can help you identify where in the market cycle we are because real estate moves a lot slower than a lot of other investment vehicles like stocks and other investments. So we want to realize where we are in the market cycle, and it'll help us know what to expect coming forward. So stages of a buyer's market. First one is transactions dry up. I'm in the South Florida market here. Again, it varies if you're in the Midwest, if you're in the Sun Belt, if you're on the West Coast. But I can say across the country, transactions have definitely dried up. So prices were super high, sellers were asking more and more money. And eventually it got to a point where buyers said, hey, that's enough. We're not going to be paying these high prices anymore. So first of all, the multiple offers dried up. So now you might only have one offer on a property. And so that caused a lot of transactions to just fall. The transaction volume fell, partly because the seller's prices were too high, partly because interest rates were high and a lot less buyers could afford the real estate. And a lot of buyers probably just thought, hey, it's too expensive anyway, even if they could afford it. They didn't want to buy at the peak of the market. So transactions drying up is the first symptom of a seller's market turning into a buyer's market. Second thing, what happens, I mean, this is all pretty logical stuff. You can follow it in real time. It just happens slowly that a lot of people don't necessarily pay attention to it, but inventory piles up. You can look at this yourself if you have MLS access or Zillow. Across the country, inventory is piling up. Why is inventory piling up? Well, what was the first thing we talked about? Transactions dried up. So when transactions don't happen, those properties that would have otherwise transacted, they're still on the market. But that doesn't mean that new properties don't also come on the market. So we've got the old stale properties. Now we've got newer inventory coming in, and that's also sitting. So as time goes on, that inventory starts piling up. And that's in South Florida here. That's kind of where we're at in the market cycle. The inventory has piled up. Prices are still hanging out at a pretty high rate. Again, you can look at anecdotal evidence for a single house or multifamily selling. But overall, the prices still haven't come down, but the inventory is definitely up and transactions have definitely dried up. Third thing, lower closed comps appear. So starting to see these transactions happen a little bit where I am. In your market, they may have already happened. We might even be on to stage 4. But lower closed comps appear. What does this mean? This means that there are a subset of buyers out there who put in lowball offers. It's a part of every market. Some people's investment strategy is just, hey, put an offer on everything. Lower offers is fine. Pay what we would be willing to do the deal at. So there are sellers who are hanging out at high list prices, but are actually more motivated to sell. They just don't want to be the first one to jump and lower their price dramatically. But an offer does come along and they actually consider it, whereas maybe 6 months ago, 12 months ago, they wouldn't have even given it a second thought. So you start seeing some of these lower close comps appear, and you might actually be surprised. You might be tracking a deal that was listed. I was, looking at this deal that was listed at 870, and ends up closing around the 700 mark. So there's a bit of a difference there where you wouldn't expect it unless you were tracking it, that a seller would actually take that big a haircut on it. But that's the first telltale sign, is that we start seeing lower closed comps. And then that follows number 4, which is listing prices drop. So no seller wants to admit that their property is worth less than what they think it's worth. They're all hanging on to this kind of little hope that, hey, someone's actually still going to come along and buy my property at this higher price. But reality kind of sinks in once an actual lower comp in the area closes. So for example, if you're listing your place at $1 million, your neighbor is listing at $1 million, they end up taking 850 because they need to go sell the place. Now there's hard evidence there that the market has gone down, and no one is going to take your $1 million seriously. So once the first one falls, the rest will follow. You're going to see similar kinds of properties drop their list prices if they are legitimately needing to sell. And that will cause the market to start going down. And that's where we are in some markets across the US. This is already happening. Prices are dropping. Some are still slowing down, but not at that point where prices have dropped. The inventory has piled up. So you can follow these steps, and this happens almost all the time in a down market. And this is just how it logically goes in real estate. It doesn't really change unless there's a really dramatic event. The question is how much the market will go down. And that's a question that I don't know. And, there's a lot of talking heads out there that will predict how much it's going to go down. Is it going to go down 5%? Is it going to go down 50%, or somewhere in between? It's impossible to know. And there's so many factors that play into it, including least of which interest rates and where they are at the moment. And also just, the jobs market, buyer sentiment. A lot of these sellers don't need to sell with interest rates being locked in at such low rates in the past few years. So there's a lot of factors that can determine whether there's going to be a minor blip where maybe we only see a few percent drop, maybe even just stagnation in home prices, or is this going to be a more dramatic drop? And that is really the $1 million question. The timing is here. We know it's here. It's just a question of how much, and that's the bet that people need to be putting on. How much is it going to go down, and where is the bottom going to be? And that's a very tough question to answer. But we know the steps in the market cycle. We kind of know where we're at. A lot of markets are already on stage 4. Me personally, in my market, we're at about 2.5, closing in on 3. I think across the country, you're seeing a similar story, and it's going to vary from market to market how much it's going to drop as well in a traditional transition into a buyer's market. So that's all we have time for today. Thanks again for tuning in, and we'll see you next time.